Hey, my fellow investors, what a week we had last week. Just look at this chart, ladies and gentlemen. Yes, for 2024, last week's performance based on the S&P 500 is and was the best performing week. I'm sure you actually came in because you listened to our video and attended our classes. Remember in last week's video, we showed you this particular chart, which showed you that if the volatility on the VIX falls from 65 down to 25, half the time, the market bottoms within a very short period of time. Now, we have mentioned in our last week's video that since 1990, there have been 9 occurrences of this like this. So last week's bounce, which brings us very close back to the S&P high, the Dow Jones high, and the Nasdaq high, is a reminiscence of this phenomenon. So once again, ladies and gentlemen, give a clap to yourself because you have benefited, you have listened to us, and you have attended our classes. In this week's video, ladies and gentlemen, let's carry on and see what does it actually mean, with last week's reaction in the market in the last 2 weeks. Now, basically, when I was cleaning up some of my stuff, it's one particular thing that I want to came across, and that is actually this particular photo. Okay, now this actually depicts, from Life magazine, the sell-off in the stock market in 1962. Now, ladies and gentlemen, yes, I know not many of you were born at that time, 1962, but we had a market sell-off, and look at the headlines in 1962. Now, for example, we say, what went wrong with the wild stock market? Isn't this something that you asked 2 weeks ago when the market sell off? Okay, and the next headline in the yellow box is the avalanche that went down and then went up. Yes, ladies and gentlemen, the whole idea of severe market corrections is that when the avalanche comes down, one, you're prepared for it. And two, when it comes down, it is when you actually came in and buy big, as what we have done and what we have shared in our YouTube videos and what we have advised in our GCP Global classes. And I'm sure you have benefited because of this. Now, the whole idea, ladies and gentlemen, is that you may speculate the reason, so on and so forth, about a stock market sell-off, but in reality, do you benefit from the sell-off? That's a key thing. So positioning to benefit from market sell-off are key in growing and multiplying your wealth, as what we have done so in GCP Global. Right. Now, let me just bring you back a little bit on the last 2 weeks' performance. You notice that we have highlighted the previous sell-off, the sell-off on August 5th, the previous Monday, when the Nikkei actually went down 12.4%, was the largest single day gap down since 1982. Yes, ladies and gentlemen, we have to go back almost 50 years for that. Now this kind of phenomena is something that if you have been ardent investors of the stock market as what we have been since the 1987 sell-off, you notice that these are events that you gravitate towards, that you would definitely need to take advantage of. After all, exactly what we have been saying, in this Sunday Times, or rather Business Times, in April of 2017, I was quoted to bet big on times of crisis, says GCP Global Gabriel Yap. And this happened again just 2 weeks ago, and I'm sure you came in. If not, do join us for our next class on the 14th of September, our last class, where we will be able to guide your positioning, will help you in your strategic focus as well as your tactical plays, be it real estate investment trust, be it tech stocks, be it luxury stock, be it pharmaceutical stocks, and be it commodities stocks. Now, after all, ladies and gentlemen, the VIX that we saw that actually spiked up to the previous high, of 65 that we saw on the 5th of August is only the third highest. And what we have seen so far is that, as fast as it has gone up, as fast it has actually come down. Now, ladies and gentlemen, we speak, with experiences. And in my 35 years experience, for example, the Sunday Times interviewed me in 1st November 2009 after the global financial crisis. And exactly what I say, fortune favors the bold investor. Now, in that article, ladies and gentlemen, I've shared how I was able to actually buy a few stocks. For example, Citigroup below $1, AIG, as well as basically GE at that time. Why and to what extent those bases actually holds and relevance then in 2009 and now is still similar and something that we distill in our classes. So for those of us who are REIT investors, you may ask, hey, so where are we now? Well, look no further, look at this chart, ladies and gentlemen, as what we have shared previously in our video as well as our classes. The last class being 29th of June, we have said that presently where we are, the REIT market has sold off 28% or down a voluptuous 245 points. But more importantly, over the longest period of correction ever in Singapore REIT history, that's 27 months. Now, these are indicators that the market has bottomed for real estate investment trusts. So what does it mean, therefore, going forward? Well, we have told you and shared with you separately, and we have been a record in the media to say that especially so in our last class, where we shared that the triple bottom in REITs, in real estate investment trusts, was already seen. We're on 27th of June when it hit 620 thereabouts. So in that regards, going forward and positioning, you'll be asking, for example, take a look at Mapletree PAC. It's been a huge drop. It's fallen from 240 down to 120, and you can see over here that it's been undergoing a longest rectangle formation sideways consolidation for not only just 1, 2, 3. You might say, oh my god, it's 7 months. Yes, almost as long for a baby to be delivered. But is it therefore right for a time for the bounce? Well, it's something that we're going to discuss in detail in our next class on 14th of September. So do sign up. And just last week we had the option as well as the honor to meet up with Mr. Kelvin Chow as well as Ms. Lynn Billint of Lendlease REIT. And this is one REIT, ladies and gentlemen, that gravitated their assets profile more towards into Singapore. So they own 313 Orchard. They owned the Gemmed building in West Coast, and they also own 10% of Parkway Parade. Now I think there's probably more to come on the Singapore assets as they actually rationalize, and the Sky Tower in Italy, thereby allowing and repositioning and allowing to reposition to actually capture the growth ahead. Now you may ask that this bottom up price, is there upside and to what extent is the upside and when is the upside coming? This is something that we will share in our next class on 14th of September. So once again, hope you enjoyed this week's video. Do sign up for our class on 14th September to enjoy the early bird special. Until till I see you next week, enjoy this current powerful rally because you have positioned well if you have listened to us. Cheers.